Welcome back to Biz Asia America. Trying to figure out the right broker or advisor to help you manage your money is sometimes a chore in itself. A mistake can come with a hefty price tag, and that's why some tech startups in San Francisco are trying to find a broker solution that's based on mathematics. And Mark New joins us now to tell us all about this. Mark?
Mike, successful investing should involve calculations and data analysis. That's why a new breed of tech startups believes it makes sense to rely more on computers and less on humans who are prone to mistakes and also greed. Brokers and investment advisors beware. A handful of new competitors have arrived on the block, and they look like this.
The computers are good at really only doing one thing, and that is doing a math problem repeatedly and accurately. And it turns out that finance is really just a math problem done repeatedly and accurately.
So better than a broker?
Absolutely.
Chinese-American computer scientists Bo Liu and John Xu founded the startup Future Advisor after financial advisors rejected friends of theirs because they didn't have enough money. They analyzed their friends' portfolios themselves and discovered the same financial mistakes were being made over and over. That led to the development of an algorithm that in minutes links your accounts, examines your financial situation, and gives recommendations. That version is free, though our premium version in beta testing goes one step further by fixing the mistakes for a yet-to-be-disclosed fee.
We will only make money one way, and that is via fees from our clients. Because once you start making money in other ways, then it all starts to be a little weird about being compensated for the things that you recommend your clients do.
Harvard graduate computer scientist Mike Shaw competes in the same space with his startup SigFig. By desktop, tablet, or phone, SigFig's algorithm makes sure you're not overpaying on both brokerage and investment fund fees and more.
This person unfortunately has a really expensive advisor. If you have an advisor, we can actually go in, look at how much they're charging you, look at what their performance has been, so we can actually benchmark you against others. And we can also identify if your advisor is engaged in any, sneaky behaviors.
SigFig is free, but it does get referral fees from some advisors it recommends.
We have a team of financial professionals here who actually develop the underlying algorithms. That team develops those algorithms with only one thing in mind, which is what's best for our end users.
The company also generates money from using its technology to power similar functions for websites like USA Today, Forbes, CNN, and most recently, Yahoo Finance. Shaw says SigFig currently keeps watch over $50 billion, and unlike humans, its computers can monitor the money 24/7 at a fraction of the cost. Both companies say the main enemy here are those numerous and sometimes mysterious brokerage fees. No one ever seems to pay the same thing, and there are different fees for different amounts. Both companies also say the math is really not that hard, but that people just don't have the time to keep track of their finances. SigFig told me their algorithm can save the average user $70 per year in brokerage fees alone. Mike.
Interesting. Mark, well, let me ask you this. Do these startup companies actually utilize their algorithms to make any stock picks?
No, they don't actually make individual stock recommendations, but rather they subscribe to the philosophy of investment principles and balancing out in investing in the market as a whole, sort of index investing. However, Future Advisor does advise against investing in particular stocks, but more based on investment principles. Once again, they may tell you not to invest in the stock of your employer because you may have your salary invested in there, and then you would be more susceptible to risk in one area. So it's more based on investment principles. Also, it is worth noting that these startups are also federally registered investment advisors, and so they are regulated by the Securities and Exchange Commission. Mike.
All right, Mark New joining us from the West Coast tonight. Thanks so much. Al Jazeera.